Hey, good morning, everyone. This is Vance out of Seattle, Washington. Welcome to my live morning Forex trading show. This is my last show this week. I do these shows Monday through Thursday, and I'm not sure what to call them, a video, a show. Anyway, we've been calling it a show, so I'll continue to do that. I wanted to show you guys something, but it's not actually working that well this morning. Over here, if you hit play on the thing, what's going to come up is be part of the conversation. When you do that, it brings up this window, and it says it showcases on, but Google wouldn't actually let me put in the links this morning. But usually on this show, you'll see these links, and all I'm trying to point out there is how you can follow me on Twitter. Just go to Twitter and search Forex Art of War, and you can follow me, and then you'll find out when these shows happen. And I'm not sure what the deal is with the links. The other thing is, if you want to get a couple of my free books, you can get them here, forexartofwar.com. That's actually on the main page. It's actually on all the guest pages. And then remember, we're writing analysis all the time. Keep it very brief. It's not willy-nilly. It's really focused on price logic and fundamental, what's going on out there in the world with respect to the dollar and what have you. So, but these, we've had, tens of thousands of downloads of these. These will tell you why most people fail in Forex trading, and also give you my first book in a 3-part series called The First Battle, and it'll help you build a basic foundation. All right, so I wanted to talk a little bit about fundamentals like I've been doing to start off the session. Yesterday we had the FOMC meeting minutes released. We were all watching that. We were watching to see if there would be any change with respect to what they're saying about interest rates in the future. I did publish a few thoughts about that yesterday after the meeting, and also a little bit yesterday evening. But again, we were looking for any change in the tone at the Fed regarding the timeline of future interest rates. And it's important to know that, because that's that's the main fabric of the story when determining sentiment out there right now, is what are the central banks planning to do? And their main tool is interest rates. And anyway, I want to show you, let's just look at the chart here, show you what happened during the release of those minutes. But get over here. It was a very, very strong move. It moved up about that from the time the move began. It moved up about 70 pips, pulled back to 38.2 here, and then made a nice second push. So then there was another move that actually followed that started here, moved up about 40 pips, pulled back about 61.8, and made another second push. It was interesting. Yesterday, there wasn't a lot of spread issues about 10 minutes into this data. So some people actually did catch this pullback right here, and maybe they felt comfortable taking it. I think when data is new like that, and there's a lot of speculation going on, the risk is increased. So I just wanted to show you that movement, and we had movement across all of our main currency pairs. Now, after we had a day to digest, it seems like the understanding is crystallized a bit more. The FOMC minutes were concerned with the dollar being a little too strong, and even more concerned about weakening currencies in countries like Asia, specifically Japan. And a weakening currency in Japan helps them export more cost effectively over time, and this diminishes the U.S.'s ability to export to them. So, while we're looking at concerns in Asia, their real concern is economic growth of the U.S. That's their primary concern. But, it's a fine balancing act. But it seems to me that this pact that the countries have right now, the central bankers in the various countries, to not allow a currency to depreciate due to competitiveness, seems to me that's a pretty fragile relationship. There's so many moving parts, and the problem is that people enter into agreements based on a common goal and good faith. And if that good faith ever comes into question, the agreement would likely dissolve very quickly. And then the other thing is that was really in the news yesterday is Europe really is in danger, the Eurozone, of going into another recession right now. So that's what's happening. That's what's driving this right now. So let's take a look. We showed this potential setup, which would have been aggressive on a fast-moving, high impact data release. This is the euro again. I'm down on the 5 minutes so that we can see the behavior better. Remember that what I do with price logic analysis is not about chart patterns, candle patterns, indicators. It's just about human behavior. We know that this is the most common pattern repeated pretty much in the world. When there's a clear trend, people want to get on that. When it pulls back, it pushes again. I know it sounds simple, but hey, I've been talking about this for a long time. But the main issue is that it's not based upon this pattern. It's based upon this behavior. This is what human beings do, whether it's tennis shoes or, women with new shoes, whatever. This is just human nature. And so that's the behavior that we look for. And you can see here, we've got to move just as the Eurozone is opening, the banks over there moves about 30, pulls back 50%, makes a second push. Actually, it could be argued that this pushed here, pulled back to here and made a second push, corrected to 50%, and then took off again. That's probably the more accurate way of reading that. Here we took off again and moved up about 34 pips. And this was actually a failed pattern. It was moving so quick. Let's take a look at the 1 minute chart real quick and see if it doesn't show us that behavior pattern unfolding a little more quickly. Let's see. We had a move. Nope. It's just a failed pattern. I mean, nothing's 100% of the time. It makes a push up. Maybe there was some information that came off, pulled this back into here. But the overall trend was good because then it comes along and it makes another push up. Let's see. Then that would have been this here. All right, so you can see the pattern, worked 1, 2, and then the third time at this, all new high, the pattern did fail. It did not make a second push. Over here on the pound, let's take a look. Yesterday during FOMC, it was moving very fast. I'm going to kind of leave that alone since we talked about that before. But what I want to talk about is here around the London Open, which was right here. Well, it looks like it was about 40 minutes after. It makes a really nice move, 45 pips, pulls back to 50% and makes another second push here. Then, and this move starts, I want to put an arrow for you here. This move starts here. If you want to know how to draw these fibs with accuracy, I make that education available for free. Let me bring it up for you real quick because it's really important that you know how to do this correctly. Let's see if it's shown right there on the main page. It should be pinned to the top. Master the Fibonacci tool. That's about a 20-minute session, and it will teach you. If you learn how to do this, it will show you when the buyers or sellers have an advantage and how strong that advantage is. It's a very powerful tool that I developed in about 2007. I guess technique, you would say. All right, so moving back over here, we talked about this. So this momentum starts right here, and let's see, moves up. Oh, it's a small move, 20 pips. It does break the high. It pulls back to 50% and makes another push here. So that one's a little bit tougher because when you get into smaller moves, because of how small the moves are, sometimes, like for example, the pound, let's say your maximum risk is 2.5%. If your stop loss is 8 pips or under, you actually, in the United States, you won't have enough margin to actually take the trade. So, there is a such thing as trading a range too small while you're managing all your risk. So that's what I have about as far as setups from yesterday. Now let's take a look at what's happening now. The first thing I want to do is take a look at the 30-minute trend. You can see that this is, they're probably running out a little bit of gas here. The moving areas just generally show us the supply of money intraday. And when I use the word intraday, I'm talking about 1 to 3 days. talking about the short-term trends of the big money. And the big money, of course, made a major move and flipped it over and moved to the top side. So it's the money's still slanted a lot to the top side. Let's take a look at that same thing on the euro. We're on a 30 minutes, pretty much the same look. It looks like right now that they're losing conviction. Now, I had made some comments. It was about, I'm guessing about a week ago. I had said that I thought that the euro might bounce at 2,500, which is basically, it dropped maybe 15 pips below that. And then let's zoom out just a little bit. Well, no, actually went to 125.04. And then it bounced here. And what I had said also is look for price to correct to around 127.80 area for a good correction for the a move down. I mean, that's what I said. I'm just telling you. And that was based just upon my previous experience with long-term trends. And I feel like we really do have one right now. What's unclear is how much the central banks are going to interfere with that competition in the economies, where the Eurozone looks poor and the United States looks strong. So anyway, I just brought that up because, this is where I thought it might correct to, from that, let's zoom out, from that big downtrend. I thought this might be a natural area. There's a lot of resistance right in this area right here. But anyway, we'll see. Right now, they've been moving up. All right, so going back to the 30-minute and looking, let me get that there a little faster. It wouldn't do me much good to put a demand line on here because this has been chop, kind of stair-stepping up. The supply and demand lines work very nicely, like right here. See this area right here where it's sideways? They work very nicely here to define, a kind of a battle line between the buyers and sellers. All right, so let's take a look at where this might turn around. This fib, which I'm going to draw right now, this is a reversal technique. I don't really teach this. It doesn't really affect your trading decisions, but what I'm looking for is that key turning point. The moving averages I look at loosely. I think the key turning point, I'm just looking at it, it's right here. It's probably 20. This is just me using my experience. It's probably right there. I'm going to say, oh, well, oddly enough, that is 76.4 of my fib. Not oddly enough. It's not a coincidence. So that's the key level on the downside, 126.83, where the sellers will likely pick up a great deal of confidence. So that's what we'd be looking for there. Let me just put a price on the top side for you here. We would need the buyers to advance this above 27.83 with some strength to get a high probability advantage to the top side. All right, going over to the pound, let's see what's currently happening. I'd like to clean up all this, but I'm just going to ahead, forgive the mess. I'm just going to go ahead and stick with this for the moment. I'm going to drop down to a 5-minute chart because I want to make sure that I like this fib area. Yeah. See, the market will show you where the right place is. Let me go back to the 30. I might be moving around a little too quick for some of you guys. Yeah, this is just too messy for me. All right, so zoom out just a tad. I'm looking for that level where the buyers and sellers, where the sellers will basically become confident. Okay, I'm going to say it's probably going to be, let me get a new label here. Probably going to be 6,100. So if price can get down below 6,100, that will likely be a good area where the sellers will regain control of this. All right, so top side, and I can zoom in a little bit because I'm so messy. I got to top side. We're looking at 162.14 for a buyer advantage above there. All right, I know I was covering a lot of information very quickly. Just remember, you can watch the video again. You can write to me with any questions. I love to address questions, and probably since it's going to be not till Monday when I have another show. If you write to me, I'll probably just write you back today, as long as it's earlier, because I I stop Thursday afternoon and I take off till Sunday evening. Just a heads up, we're good. We haven't opened our training program for a couple of months. We do that from time to time. It's part of what I do. I help people learn to do this. And just to let you know, you can read about our traders' experience. There's a lot of experiences, and they post that without me editing or anything, so you can see what their experience has been by clicking here. And just remind you, you can get my books here. And also, I do not send out emails about when I'm doing these shows every day, maybe once a week. So you do need to go to Twitter and find me at Forex Art of War, and you'll get notified. So anyway, on the training, if you're interested in learning more about that, it's probably the most comprehensive Forex training course there is. And what you'll see that's different about what we do is not only do you have great education, but you have great coaching. So it's one thing to learn all the logic from a great baseball player. You can read all his books, you can listen to him lecture, but really the key to getting good fast is having a coach that can watch you take what you learned out of the book, swing the bat and say, okay, you need to choke up on the bat a little bit. That's what makes it fast. And, we pretty much give away most of what we know because it's easy. Watching you requires focus and time and that sort of thing. So anyway, write to me if you want to know more about that. So hopefully you got just one good idea that's going to help you with your goals this morning. To our members, I'll see you guys coming up in a little under an hour for our live trading room as the New York Stock Exchange opens. Cheers, everybody. Have a great weekend.